Hello, everybody, and welcome back to another Commodity Insights podcast with the team at Farmers Trading Company here. I think we'll get started talking about the wild cattle market. It's been pretty hot this week, and we're in the midst of a pretty wild rally, I'd say. Feeders were up $2 to $3 today. The fats were up about the $1 to $2 there. Um, I guess overall events, yes, last week we heard that the cutouts were both sharply higher and the packer had slowed the kill down. This week, that's not so much the case. It seems like it's been pretty quiet in that news front, but what's getting this cattle market so excited, or what are you seeing there?
uh, Feels a little bit like you come back and you just got money coming into it to get a little bit of confidence back in after our uh, avian flu thing of a number of weeks ago. You still hear a little bit about it, but not a lot. But I think that's a lot of it. Funds are only long coming into this morning, about 35,000 contracts of fed cattle, which is way at the bottom end. When we peaked at last fall, we were like 120,000. So they got plenty of buying to do, but I think that's part of it. As you noted, box beef isn't doing a lot this week, but we had that big $16, $17 move last week, which I think is good. We've had good movement this week on the box beef. No runaways. We did see some 192 trades in the north on Tuesday, which did not hurt that, bringing us up about $2 for the week. The other side of things, when you look at the feeder cattle and what we've done, Tuesday was kind of a quiet day, but Monday and Wednesday, big days in here. When you look at what the feeder cattle index has done the last 3-4 days, one has to believe that those southern barns and the places that are reporting are starting to catch on fire a little bit more than they had been before and helping to push this thing north.
Over to you, Andrew. Any thoughts you'd like to add on the cattle market or things you're seeing on the chart or hearing?
Yeah, a combination of things. Number one is just what I'm hearing out there in the marketplace. I talked to a producer yesterday afternoon, and his comment to me was that cattle prices are really good. I just wish I had something to sell. And I said, well, I think you just hit the nail on the head as to why cattle prices are good. You're probably not the only person in that position. So that's what's driving this market higher. So I think we could be looking at a little bit of that. Maybe the packer already shook loose some of the cattle that we're supposed to go this time of the year, and maybe they went a little bit early. That's a possibility. I'm not 100% sure on that. Then as far as the chart goes, it was a very interesting one to me today, looking at like an August feeder cattle chart. We went right up to that 200 period moving average a couple days in a row, and that stopped it. And last time we were there, it stopped it pretty quick. And today it looked like it was going to stop, and then she just took off and ran. I'm sure it broke through quite a few stop orders there, and that pushed it a little bit higher. So we'll see what that feeder chart wants to do. But from the perspective of just purely looking at the chart, there is a lot more room that this thing could try and push here. We'll just have to see how much of a bull story they can keep going on this thing. Stochastics starting to get up there, but by no means is it a ridiculous level yet. Fat cattle, looking at an August contract. There's room on that thing to run another $4 probably pretty easily. Beyond that, I guess we'll have to see if we can get some more fresh bull news out there. Otherwise, you could see a bit of a healthy pullback in that market.
And then at the end of the week here, we have this cattle on feed report for the month of May coming out. Some of the estimates there, the trade is expecting 99.2 on the on feed. The placements, they're looking at 93.9, and the marketings in April, they're looking at 109.8. Overall, Vince, with those numbers, is there any expectations out of the report here on Friday or anything you've heard as far as the direction this could take us, or is it just going to be pretty quiet overall, or what are your thoughts there?
I think the biggest thing is to see how it comes out according to those numbers. One has to believe those numbers are pretty well plugged into the market by the time you get to that report. If you're $2 or $3 either way or more than that, then I think you get a big influence out of it. Otherwise, I'm not sure you do. We have been pretty consistent, at least in the fed cattle market, of topping or bottoming that market around the cattle on feed, which is usually around the 22nd. We're a couple of days later this week. So let's see if we put a high in there. You and I had visited earlier in the day that somewhere in the next few weeks in here, we are ideally due for a 35-week low in the feed or high in the feeder cattle. If you look at some of those daily ones, probably another week or 10 days before you get to some of those short-term ones. So hopefully the cattle on feed report can maybe be a catalyst and keep pushing us here.
And then moving on to the hog market here, it looks like we just continue to keep sliding lower and lower. We're down about $1 today, a little over $1 in some of those contracts. But is there any fundamental news that's going to turn this thing around? You'd think with the cattle market racing higher that maybe that would help pull the hogs along, Vince, or is there anything you see in that market other than just technical buying and selling that's causing this?
Typically, I think the biggest thing that's causing it, unlike the fed cattle market, when we turned around that product market last week, we have not done that in the hogs. We've been scrounging and scraping to stay above 90 in that cutout level, and so far we're doing it. But the thing that's really hindering the movement of that higher is bellies and hams that are doing nothing. They're even losing a little bit of value. We could get those to catch on fire, especially bellies as they do this time of year. That's what I think the market is looking for to get some buying interest.
And Andrew, any thoughts on that hog market as well?
Yeah, it certainly has been an ugly one, and I think you look at the speculative fund traders quite a bit. They had a very large net long position here, and that would have been towards the middle toward or late April when they were really talking about they needed to lighten up some of their positions, or maybe they didn't specifically say it, but everyone was looking along those lines, and they certainly have lightened up on those positions. Something we didn't mention on the cattle market is frequently around the 22nd of the month, you do see a high or a low within that market. Within a couple of days of grace period, either direction there. Could we be seeing that coming forward here in the hog market as well? From a technical perspective, it looks like a great place for this thing to try and take a bit of a breather. Could the hog market drop another $4? It probably could pretty comfortably and then take off running here. Do I personally think it does that? Not so much, but we'll just have to see what this market does.
And then moving on to the grain markets here, I think we'll start with the wheat market first because it's had the most movement, I guess, and it's been kind of a wild trade. There's news out of Russia one day that their wheat crop sucks, and then the next day we hear that Kansas is really good, and so it's up and down and up and down, and just keeps taking us for a ride. Today it finished pretty quiet overall, just slightly in the red, but nothing crazy after being up double digits in the night trade. Overall, which story do you think is going to win out, or where do you think we're going with the wheat market there, Andrew?
I think fundamentals at the end of the day will win, but people are really going to technically trade this market. Just purely looking at the chart, I would say that we're in more of an uptrend than a downtrend. So, treat that as you want to, but there could be definitely some higher levels in this thing down the road here. I talked to one producer earlier today, and he's been fairly spot on with the wheat market lately. And his idea with that thing is that it could go another buck higher. Personally, I don't think I would wait around that long to do my selling if you were rallying the wheat market. Just looking from that high that we had last summer, which is a seasonal time for the wheat market, to that low that we had in that March timeframe, late February. If you can get up to that 790, that'd be quite a good retracement. 790 to $8, I think that'd be an incredible rally. That is $1 away from here right now. So is it a terrible idea to start putting a little bit of hedges on this market at the moment? No, it's not a bad idea at all. Anywhere between $7 and 720 probably is a place to look at getting some percentage of your crop done. And when you're doing this year's crop, don't forget to pay attention to next year's. We did put a few hedges on for some producers on the September of 2025 Kansas City wheat at 750 on the board. So don't be sleeping on that one as well as you're looking at doing some marketing for your wheat.
And over to you, Vince. Any other thoughts you'd like to add on that wheat market or things you're hearing?
I think as you noted, we got varying news as we started the European market last night. You had a gap higher open in that French wheat market. You've got some flooding going on there. You've got flooding going on in central and northern Russia, where they are not getting the spring wheat planted. You got dry in the south, and that doesn't look to change a lot in there in the biggest winter wheat growing areas. So it's trying to discern where it's at. One has to be a bit disappointed that you could come back overnight and put some new highs and not close above those. It feels a little heavy in here, but as Andrew said, maybe you can go another buck higher, but I would wonder in the 7 to 720 area in Kansas City, September, maybe you can get to 740 or 50, but right now I don't think you do a lot more than that without some changes in the world.
I think we'll move on to the corn next. Looking at the corn markets here, they're kind of getting, I guess, drug around with the wheat a little bit, but a lot quieter of a trade. Seems like we're maybe working on another leg higher here and chopping higher, but overall, not a lot happening today in that market. Looks like we were about 3 cents higher in the July penny and 3/4 higher in the December. What's the news the trade's looking for there, Andrew, or what are your expectations moving forward?
Weather and planting progress is what people will be looking at and talking about going forward here. Do we have the flooding issues continuing in some of the I states? Given that crop progress report that we had on Monday alleviated a lot of those concerns, showing how much we can plant in 1 week here in the US. So not sure if that's really the number that we'll be looking at. More so, I think we have to pay attention to some seasonality within this market, along with that, the weather concerns that could come with it. All those storms that they had in Iowa on Tuesday of this week, that certainly did not help out their planting progress and their existing crop that they have in the ground. Things like that is what we will really be watching from a technical perspective. Look at that 20-day moving average. The last few days, the market didn't care too much about it. And then starting today, now they did find support on that number and closed above the 9-period moving average. It's been a little while since we've done that. So I think start to pay attention to that market and see if we can get a bit of a late May to early June rally like we do seasonally.
And Vince, any other thoughts you'd like to add on the corn market or anything you heard with the ethanol report or any of that stuff?
I think if you looked at Wednesday's ethanol numbers, we did up production by 6 million gallons, get them to a little over 300 million gallons from where they were last week. That would have been 3.7% above production the same time a year ago. Interesting fact on the other side, stocks did decline 12 million gallons, which is good to see. And you're at that time of year where gasoline and driving demand should pick up. So that would help that. But even though you drop that 12 million gallons, that was the highest stocks rate for that week in history. So conflicting numbers in there, but I think in all, those numbers are okay and good. We're going the right direction. I think we have to find something fundamentally or money coming into this market like we're seeing in the cattle market to get any further rally. It just feels a bit dead in here. Tuesday, we did pull that July back to the mid 450s and found support there. Not that we're running away, but we have to see what we do. I would think the next 2 or 3 weeks is really that annual time of the year to make some sales unless we get some really dry weather later on in the season.
And then last but not least, let's look at the soybeans here. They were up 11 cents in the July today, up 7 cents in the new crop. Keep making higher lows, though, is the thing there that I guess I've been watching. We haven't taken out our lows for the last 6 or 7 trading sessions here. Seems like we're maybe in a little bit of more of a bull run here, but we are running into resistance. Ultimately, where do you think that market's going, Andrew? And is it going to follow the corn, or is there different fundamentals there, or what are your thoughts?
No, I think overall corn and beans will try and head the same direction. Whether it's at the same rate is really the question of the day. Where could beans really go? Looking at a new crop chart here. First off, the number to beat is going to be that 1230. That is our 200-period moving average. The next number, of course, that everyone's looking at, 1244.5, that would fill in the gap that we put on the new year. So those are some of the numbers that I would be watching. Be above and beyond that, if we got to that $13 futures area, there's probably going to be quite a bit of hedging done as well, 13 to 13.25. So I think that's a lot of what we'll be looking at in the next couple of months here. Whether or not we can get that Father's Day rally that I always like to look for, I guess that will be yet to be seen, but that's certainly one that we want to be paying attention to. Just looking at that new crop November soybean chart, if you tilt your head just right, maybe you can be looking for a bit of a bull flag on that chart. It's not as pretty of one as I would care for, but we'll be keeping an eye on that and see if we get some sort of technical formation and get some fund traders interested in buying this thing.
And over to you, Vince. Any thoughts on that soybean market that you're seeing out there?
I think I'm going to do a lot of what Andrew just said. Again, we need to take out last week's high of that 1256 in July to keep this thing going. From an old crop standpoint, if we're looking at November, that same number is going to be 1228. We get those taken out. Maybe we have a shot at that 1280, the $13 level, but I don't see a lot more than that short term. Market feels stronger than it did earlier. I think if you look at last Friday's commitment to traders report, which would have been through last Tuesday, you did see the funds net long meal market, and that's really what's led us on Monday and today when we went up. So let's see, again, that hasn't taken out last week's highs either, but I think that's what's helping to hold this together, along with, there was a story out this morning in Rio Grande do Sul, Brazil. There's still about 15% of that soybean crop to harvest with the big floods that we've had. Some of that crop is going to be abandoned. How much of that could really make a difference on where beans go and what they end up for being able to sell. The other thing I found interesting in that story is they talked possible losses of beans in storage because they were standing in water in some of the bins and holding areas. So we'll have to see how that all shakes out. That'll probably be a while down the road before we know.
And then any closing thoughts or things that you'd like to get out there, Andrew, or things that you saw in any of the egg commodities or in the egg world?
No, I haven't seen a whole lot out there, just some seasonality stuff at play, the fun traders and all the news. It's really wild like it is this time of the year. I think something we'll have to continue to remind ourselves is sometimes you can consume almost too much news. Let's watch some more of the larger trends within this market and see if we can pay attention to those seasonalities. And when those seasonalities provide us with the clues to make some sales, we'll pray that we have the guts to make them, because usually when that is going on, that's when you don't want to be selling, whether it be crop production issues or the market looks very bulled up and you think that it should continue going higher. When you're in one of those two situations or both of them combined, that's when we really need to be doing some selling.
Same question to you, Vince. Any closing thoughts or things you'd like to share?
I'm gonna head back over to the total shebang in here. Late on Wednesday morning, there was a story out by the World Bank, and the title was something like World Bank urges Western countries to totally disband farming practices by 2030. That may seem a bit wild, and people will say that can never happen. But I want everybody to remember what the European farmers have fought with the environmental people over the last several months. So far, they've won, but this is all backed on environmental things and climate change. And I'm a believer in climate change. I am not a believer that it's here because of fossil fuels or carbon. That is nothing more than a show to make a few people lots of money. Do some digging yourself. Urge everyone that's in this business of production agriculture to talk to your senators and representatives, educate the city people on where you're at. We need to get things like this stopped, because this organization is actually looking at the World Economic Forum to be the leader in this. And for those of you that may not be familiar with those, their Agenda 2030 states that by the time you get to 2030, most people in the world will not have anything and they will be happy. I will let you discern for yourself what you think that means.
And with that being said, I think we'll wrap up this week's podcast. If there's anything else we can do for you, give us a call at 605-996-6500 or check out the website farmerstradingco.com for more information. Thank you.